Okay. Hey guys, just let me know if you can hear me okay. Just be waiting a few more people to toddle on in. Who we got on today? Bobby is there. Fantastic. So all good. I didn't realize I was just putting this up here and I didn't realize how much of the screen is missing. Um, so anyone that's new, welcome. Anyone that listens to this later, welcome. You'll see the top left-hand corner will be Twitter. If you can join us on Twitter, it's at trade_setup. That's how I think it's called, the Twitter handle. Top right is Facebook, and the bottom right, subscribe to us at Trade Setup. Sorry, at Trade Setup at YouTube, and you'll see I think it's at Trade Setup capital AU. So if you need that link, just email me and I'll send it across. Yeah, Nev. So all good. So just like I said, I just realised how much of that screen's actually missing. So when I minimise that, oh, and by the way, we only give general advice. I keep forgetting to say that. So you'll see that on the screen there. We don't give specific advice, so we don't take into account your circumstances. Just these are our opinions and my opinions and what I'm looking at in the markets. So let's minimize that now. So what you'll see is, well, there's a lot of stuff. Well, it's not really, it's about here where it cuts off. There's a few bits and pieces on the left-hand side of the chart, which are not that important, but I'm pretty sure we can see the right-hand side of the chart. Let me just check. Yeah, no, it's all good. So where am I seeing about here? So this is about where it cuts off vertically, but I think everything else is good on everywhere else. No probs. So, Peter, g'day, mate. So what I'll start off with is I was talking just before, wasn't so much a stream, but anyone that doesn't know, we do a Discord channel live stream, live trading generally, but the Hang Seng's been closed for a couple of days, so I haven't been doing too much on there. And that's at 11 o'clock, which is Melbourne, Sydney time. So I don't know, it's 10 o'clock now, is it? I think Bobby Bobby got that all messed up. And now that there's daylight savings time, it's same time for me, just after the market opens, about an hour after we open. And the Hang Seng, I've got to check on the time for the Hang Seng because I'm not sure if that's changing. I know the Nikkei, which we look at, is normally opens at 9:30, just before the SPY. Now it was opened at 10:30, so just after the SPY, just after our market, which it's took off. SPY took off today. So anyone that doesn't know that you want some more details on the Discord channel, just send us an email to support@tradesetup.com.au, and I'll shoot you out the link to join in. So it's really just industry traders, indexes that we're looking at intraday, just for something different. Shares we'll discuss. We can discuss too if there's anything that comes up, especially intraday, any action, any trades. And that normally goes for a couple of hours. So if you want to join in that, just let me know. It's all free. In educational. So today we just spoke more about setups from Friday and how, I don't know if anyone else does, but likes to draw up any, let me just close a few things down. So when I'm intraday trading especially, it's not so much with the daily, so we've only got a couple of longs on at the moment. It's not so much on the shares, but intraday, I'll like to review it. And because there's going to be times when you veer off your plan, and it's important, I think, to make sure you stick to your plan when you're trading. And I think it's also important if you do just take a snapshot. So, for instance, I'll just get those. I can show you. Ooh, now I've forgotten where I put them. Short-term memory problem with me. Where am I? I'm here. Entries. So that's, I guess you can see that now. I'll just take a snapshot of different ideas I'm looking at. So we discussed that in the stream. So if you get onto TradingView, the stream will be up there, but I didn't record it through YouTube. And you'll find us, if it doesn't know about TradingView, it's worth jumping on. It's a good free service just for charts and if you're a technical trader. And it's really good. There's a whole lot of stuff on there. We've got a big following on that as well, which we've been trying to build up through just through ideas, not alerts. So we've got an alert service, which is paid also. But all I'll do is stream a lot through there as well. So a lot of streams are just bits and pieces go through there. So if you want to get a recording of the stream, which I just talk about entries and ideas, jump on that. Otherwise, I can send you the link out if you need that. Just let me know via email. So that's the kind of thing that I'd like to do. I think it's a good idea that a lot of people do it. Well, not a lot, but I think if you're just trying to get into your trading and you're serious about it, it's a good idea taking a snapshot and just highlighting. If you didn't take the trade, it doesn't matter. It's still a good idea to train your brain, I guess, to see the entries when they're coming. Otherwise, this is easy in hindsight, the criteria. Sometimes it's harder to see in when it's live. And it's also good, especially good to mark up your trades. If you did do a few trades, what you did you stick to your plan? Did you trade your entries correctly, or did you just muck around and get chewed up? Which I did trade on Friday, and I got chewed a little bit. But so I like to take those and think, well, okay, there was no entry. I went short. There was no reason to go short according to my plan, my rules, and then making sure that the aim is to delete those or to not take those stupid trades and stick to your plan. I think if you got something that's back tested and you've done well and makes sense to you, I think over time, it's just a matter of time. You'll do well as long as you stick to it. I think the hardest part now for any trader, especially now with the markets the way they are, choppy, and you got so many negative news and so much positive news. You never know which way the market's going. I mean, look at the SPY this morning as a perfect example. Rocketed up. Did not expect that. Expected to open up 50 or so points, and then boom, put another 50 on top of it. We're up 115 at the moment. We've been a lot higher, about 130 up on the index. So yeah, trade what you see, don't what you expect, especially now. So it's a good idea just to, I think, to go through the motions, even if it's just a share trade. I mean, take a snapshot, and then when you refer to it later, that might stand out a lot more why you made money or why you didn't make money, why you should have or shouldn't have taken the trade. I think it's very handy. So what I'll do today, like I said, if you want to view that, that'll be a stream in trading view. I could probably get you the link. If you want to email me, I'll send you out the link. And if you need Discord, again, just email me and I'll send you the link to that. Now, what we'll go over now is just, I want to review the markets. I think it's important with everything that's going on. Reviewing the action and, what are we seeing? What at the moment, I guess it's not important to view what you think could happen and what could trigger it, because it doesn't, anything negative. I mean, Trump come out, we were saying this morning, Trump come out and got tested positive. Okay, so the news hit, the markets just sank like a stone. Now we are double, so we've made back all the losses from that point. I mean, if you go, I just get onto the SPY, it's probably, actually I could probably see on the ASX, let me just see. We'll get to the ASX. So that's where it sold off. See that point there, 58.50. Now we've blown past that. So for whatever reason, which made sense to me, why it was selling off, because of the uncertainty, you got elections and that. Now nothing's changed, and we are double the height of that. 58.50, we're trading 50, 60 points higher, and we've been higher. So it's kind of, if you trade off the news, I think you can get chopped to pieces. I think if you trade off what you see, for instance, the market's rocket higher, don't anticipate why, don't try to understand why as such, but trade what you see, and it's probably where your technical trading comes in a bit better. So it's there's a lot of markets. I mean, the US Open, I don't know if it's because he was out and about saying that he's okay, and you got some mixed reports over the weekend. If you were following the news a bit, everything was okay by him. He was doing okay, and then something else is saying he's going under some serious treatment. I mean, you never know. If he is, we were talking about that this morning. If he is not good, and then he got in the cavalcade cart and driving around waving to fans, then whoever's in that car is now going to be quarantined, and that's not. I find that a very selfish act from the President of the United States, because it only serves his own self-interest. He could get out there, he could do something else and not put everyone else in harm. So if he really has got it, there's conspiracies that he hasn't, but if he really has and it's a problem, one, he shouldn't be in the car driving around, and two, he's putting other people at risk. The Secret Service and stuff that have to be in the car protecting him, and whoever else is in there, he's put them at risk by moving around. So it's kind of, but I think it was just there. It's all show. I mean, if there's something wrong, if he's seriously got it, which I think he has, and it's really bad, he's only really trying to push it more, I guess, by getting out and saying it's not so bad. He'll get over it, all that sort of stuff. So I think that's what the market's focused on. It's not as bad as what we thought, and everything's going well. Now I just got to check that I'm still streaming. I'm still coming through. Yep, all good. So yeah, let's go over now the markets and what we're seeing. So this is I'm still seeing the same sort of thing on the ASX. This is what I'm on. I'm on an hourly chart, so that's quite fast. But if we go into, let's go to a daily, then just have a look at the daily. To me, that's still heavy. You've probably got this level down here, which is really on the daily could be the most important. So we might still get chopped. We've got a big day today, which took out the last couple of days' highs. Friday's high, which from the sell-off and the previous day on Thursday. So there's a chance that we drive up through, this level here, and we range trading between bid and the offer. So the bid down here being 57.14 and the offer around the 6,200 mark. So the the ASX could just be bouncing around between there. And until we get a bit of a breakdown, which this action is just sideways at the moment, on the daily basis anyway, that was looking negative, and that would have dragged in a few bears. I was actually looking for a bit of a breakdown. It hasn't played out. It could still play out, but it hasn't just yet. I think we've got an inside level, which if we take out that inside level, which is around 59.60, this inside level here, then I think we're just going to go off at a bid, and it could be, the bid to offer up here at 62, and we're going to sort of drive back up to 6,200, which would mean a couple of 100-point gain from here. So that if that's the case, then you don't really want to go loaded short, and I'm very skeptical about loading long. I'm not seeing particularly any strong setups, and it probably doesn't help that in the back of your head you think the market's going to roll over. So that this kind of action makes it a bit tough. You've got the big sell-off, the bounce back, and we've gone sideways since. Essentially, we've gone sideways since June. Could just be waiting for, like I said, we're just waiting for the the elections. But it seems to be negative news to get brushed aside. So something else is on the cards, whether it's just waiting for that elections. And I don't know if anyone remembers 4 years ago, anytime the talk of Trump getting in, the market would sell off, just get slammed. As soon as he got in, he got voted in, bang, it just reversed, and it caught everyone off guard because everyone was being trained to see a certain outcome. As soon as that outcome came about, everyone was loaded short. The market took off, and it was a good little massive squeeze, and we basically haven't looked back since then. So whether that's the case, the market's going to hold up because Trump, I don't know where the talk is gets in, Biden, and he does get in and we get slammed. Who knows? And it could be the case because I don't think he's going to be as friendly to Wall Street as what Trump would be. Trump will do anything to push it higher, whereas Biden might be looking more at, okay, we've got to, flood the, probably, I guess he's going to flood the market with cash anyway, probably more than what Trump would do, which would keep the ball rolling a bit. But then you've got some other problems. You've got debt problems that just keep compounding in the US. So I think sooner or later that's going to catch up with them. It's just, for now, we're just going to trade what we see. And if we go and look at, that's the XJO or the ASX. Let's go and look at the indices well, we'll start with the Dow. I think the Dow did all right. I mean, it's still in a bit of a downtrend, and to me, it's been capped. I think I'm going to have to draw this up again. Let me just clean this up. So the downtrend, you've got the highs, which were right up here. I thought they might have get tagged, and I think a lot of people just thought we're going to get tagged, break into new all-time highs recently. Whether we're seeing this kind of action here, are we just going to do that now? Or we're going to roll over. It looks like it's a good bet that we could actually just continue on higher. The level for me is this inside level on the Dow. The Dow, if you look at the 30-minute chart, you look at something a little bit smaller on, say, probably a 30-minute chart on the Dow from Friday night. It held up a lot better than, say, the NASDAQ. NASDAQ got hammered 2.8%, you'll see, and the Dow was only down, say, 0.5%. So that's pretty good. I think the S&P was dragged down a little bit more because of the your FANGs and the tech stocks, your big tech. But it was interesting to see that the tech stocks were sold off. So they gapped down, bounced back with the rest of the market, and then so the Dow bounced back, the S&P, they all bounced back from the open, and then the NASDAQ rolled over, whereas the Dow held up okay into the close, whereas the NASDAQ was lower into the close, back down, I think, probably where it started. Just have a look at that 30-minute chart. Rather than guess, so you can see gap down, okay, below where it opened from. So back to the action. So we've got your secondary move down. We've got one move down, held up, retested the lows, and we started to lift from there. But that was lifting off from longer term MAs. Could be doing the exact same thing. I mean, there's no reason why we can't hold above this low. We've got, and if you look at it, what we always like to look at, the two moves. We've already had those two moves. So if we're bouncing here and we start to hold up here, it's going to go back into new all-time highs. The Dow will rally. Whether that comes after the elections, I don't know. I don't see the fundamental or macro reasons why it should be there. If we have been sold off when the economy is at a certain amount of debt level from way back in Feb, the economy was at a certain amount of debt level. Don't know, and it's gone up a hell of a lot. So that's negative for the market. Jobs haven't made back all the jobs, probably half of them, but prices already factoring in there. You've got earnings. US earnings, they're more overvalued than when they were before. So what is keeping the market up? Maybe it's just elections. That's what I'm concerned about, where everyone's going to be bullish coming elections. Load up long, all good, and the market just dumps on it. Okay, so I'm not seeing the reasons why we should be up here, but the fact is we are. So if we're seeing this kind of intraday action and then we just think the market's just going to keep chopping along, maybe the market does not care about debt. They did not care about US debt, because what the market's watching is, okay, individually, for me, for everyone else, if you're trading and you're trading a particular company, you don't care what the debt is for the US itself, because they just can keep printing, and every time they have a problem, they print their way out of it. So if that's the case, then you've sort of got limited downside in anything in the US. It has to catch up with them. I don't understand how it won't, but that seems to be what the market's looking at. Okay, they fixed it. They just print more money. US dollar stays down. US dollar stays, which is good for the economy, good for exports. It's going to keep interest rates. Well, interest rates are low at the moment. Whether you keep printing money and causing the dollar to go down, and then you're causing inflation, which is going to eventually lift interest rates too. That would have to cap some sort of upside as well. So I think there's a few things going on, but it seems to be that you just stick to the same old theme. Print money, market goes up. We're anticipating that. So at the moment, we're anticipating more stimulus. I think Trump's talking 1.2 trillion. I think the Democrats are talking 2.2 or something like that. So yeah, to me, it looks like we're starting to go off the long-term MAs. We're just bouncing off the long-term MAs. We've had our flush lower. Flush lower here, and then we start to potentially hold another higher low. So that on the daily doesn't look too bad at all. Look at the S&P before we go to Nasdaq. Same sort of situation. Bounced off the MA, found a level in here. It's only a minor level. You're two legs down. We're starting to retrace that leg. You've got a level where if it's broken, you probably can expect some upside, which is somewhere around up here at around 34.20, thereabouts. So we get up through that level, then I think we're going to get pressure into new all-time highs again. The way it's looking. So the market's extremely bullish. This is the only thing I've been looking at, this high lows holding. We've broken that down. So whether we start to fade off this level, I don't know. Whether we chop around here and then we get smacked, who knows just yet. But at the moment, we look like we're going to repeat what we've done in the past. Longer term, yeah, it's stretched. We're stretched back up here, well and truly stretched. It just seems that the market is still, look, it could easily just continue to grind up here from here. We've flushed out a few people with this little move down, and we could continue to grind. Now, if it's been dragged up by the Nasdaq, and the Nasdaq's starting to show signs of holding off this level, maybe that's a sign of things to come for the Dow and the S&P. Okay, the Nasdaq was sort of probably ahead of themselves, and we've got this two moves down. We've got a level here at around 11.550 on the Nasdaq. We've rejected that on Friday, and we rejected it quite well. So whether that's going to have a couple of days down, we're going to retest these lows. There might still be some. Just get rid of that. I'll clean it up a bit for you. Whether we've got this kind of action and we're going to start to pressure down and we start to, get a confirmed lower high, whoops, and get something like that, then I think that's going to cause a few issues. Then you've got this level is confirmed, then you sort of got to take into account that's the move down, and we've got a secondary move down that's going to take us a lot lower. And is that going to take some heat out of the S&P and the Dow? Are we going to get a big sell-off? Because everyone's sort of waiting for it. It's just not happening. So if you've been bearish for a while and gone short, pretty much from here until previously, you've been cleaned up. There's probably times when you got lucky where it just did extend that move, but a lot of people don't, they're not really going off a short setup. There hasn't been any short setups as such here. Potentially in here has been the only one, but you're against the longer term trend. So if you've been shorting it, waiting for that pullback, you've been cleaned up so many times, so you've probably given up. And that's why we're getting this extension higher. So it could be times now where we are starting to get a bit iffy, especially in the NASDAQ, the way it acted on Friday night. It could be looking at it saying, if you're loaded to the hilt long on tech, would you want to take some risk off the table prior to the elections? With everything that's going on, with the jobs gains are slowing in the US, which is not good. So the jobless rate went down. That's great. I don't know how that, well, they've added more jobs, but they're adding a lot less jobs. So the number of jobs added is slowing right down, which means that potentially full employment now, and you're still at 7 point something unemployed. So there's still a lot of people unemployed, and they're not getting back. Now, if you've got reoccurrences of COVID in Europe, they're going back in a potential, everyone's going back into lockdown. It's happening in the US as well. Numbers are starting to go up again. What happens there? Is that going to be crimp any sort of jobs getting back, or that people might be going back to unemployed again? I mean, who knows? But it just doesn't seem like it's adding up to continue to go higher. But again, in the past, it has, and it hasn't added up very well. So it just seems to be, the more and more we get stretched on the upside, coming into the election seems to be the key focus at the moment. There's going to probably be, I would expect, more volatility coming into the markets. With more volatility, obviously, it's going to be choppy. I'm happy not to be fully loaded into the shares. Even though it's 130 up today on the ASX, it just doesn't make a lot of sense. I didn't see anything to trade before that, and still nothing really has changed. There's a lot of ETFs which are playing funny buggers. It looks like energy's up. You look at the energy sector up 4% today. It doesn't make sense when oil's been going down. So whether that's just people bargain hunting, looking for, and people will be doing that. They're going, okay, this market's going higher, I'm bullish, which traditionally, share traders, 90% of share traders are just bulls, because that's the way the market's made. The ASX is engineered to keep going. All indices engineered to go higher. A stock within the top 200 doesn't perform, gets booted out, gets something performing. So constantly that top 200, whether it's changing or not, is performing as such, because if it drifts lower, a rubbish stock, they go down. Yeah, it could be. I don't know, mate. It's a hard one to tell. But yeah, with people constantly being bullish, you're getting these things potentially like the energy sector, where they're looking at going, well, I think the market, the ASX is going up. Look at it's up 100 today. Forget about any sell-off. The bears are wrong. So let's buy the cheap stocks, which is probably into energy, because they've been beaten down a bit lately. Even if oil's going down, everyone's looking for a bounce. Now, if they're wrong, this US dollar takes off and there's a bit of a meltdown, crude will go down further and they'll get smacked. Okay, so I don't see any reason why to buy it now. If you go through and look at the shares on energy itself, like some of the big boys, they're going down. I don't see, for me, just because they're heading in the previous lows, I don't see the reason to buy. I mean, it could be if you've got a very long-term view. If you're waiting for a setup, it hasn't set up for me just yet. So we might have a look at those again in a second. Any questions, guys? I'm not seeing anything too flash, but in the same token, on the flip side, the Dow, the S&P on the daily basis, not looking too bad. If you get off to, it's probably the index, this one could be the problem, the NASDAQ. If it's leading the market, let's go to an hourly. Look, it's coming off that level, which it's done before, and then if this is the case, we could be going back below the MAs, or we could just bounce here. We might just flush lower tonight and then bounce and take out this high in the next coming days. Just have to take a bit of a drink there. Talk myself into a dry throat with all the yabbering that I do. So what are we saying here? So that's the NASDAQ intraday. The Dow's not looking too. I mean, that could look like a good spot to roll as any on the hourly basis. So just because the daily looks one way, it doesn't mean it can't sell off from here. And the S&P, much the same. It could be getting heavy here. It could chop around. Either way, there's just some volatility. I think people will be thinking twice about holding if you've been a longer term. Holding into election is going to be a tough gig, I would expect. In the XJO on the hourly, it looks like it's rejecting these lows, but you've got this key level, probably up through here, 59.70. If that holds, there's no reason why we can't sell off again and we drop 150 points tomorrow. It just seems like it's just chopping around. These moves are unusual after what happened on Friday. For me, I find it very unusual to be chopping around. It's just a rejection of this previous low, Doesn't mean we finish below this level. Watch this, Friday's, was it Friday's level? At around 59.14, we finished below that, and it's just flushed out a few bulls, brought them into the market, and turns around and squeezes them back out for the move down. Yeah, true, Arthur. Yeah, I think there's been a big change, and that's whether that's going to be on politicians' minds. I think ScoMo has been talking about that, hasn't he, back into manufacturing? So jobs are changing. It's probably the same across the board. But either way, even if they don't change, that's a longer term thing. So the short term, I still think employment's a bit of a problem in the US and potentially here as well. If we slow down, if the recovery slows down, we'll see. All right, so that's the XJO. So I wanted to go over we'll go over copper. Copper is an absolute yo-yo. If you look at that big sell-off here, I thought that was going to lead to maybe a bounce, a bit of chop, a bit of a grind high, and then potentially down the track a decent sell-off. But it still seems to be, any sort of push down and a good push down. The bulls are just the bears are disappearing. It's getting smashed into support or into lower levels, triggering a few sellers, and then turn around and squeeze them straight back out. And the sellers are stepping aside. Your key sellers, which are holding the markets down. So you've got to, the way this is beaten down, you got this move down. And if you go and look at it, I think it's here. Go and look at that move. Anyone that doesn't like, we call that volatility projections, if I can spit that out. Elephant trunk. You've been learning your technicals, John. That's a cracker. So if you're looking at volatility projections, what we're looking at is that's your move down, that's your leg down, that's your contraction of that leg down, and then you're looking for your secondary leg. If you go and measure that, if you're at this stage going, okay, if we're going to get a sell-off, where could we go to? And it makes sense, that first leg down, if you project that out, it's basically, from high to low, we basically hit that to a T. We're right on the nose before we rebound and straight back up again. So if you just add that to your technical, if you're looking at levels, where could you go to? I think it's going to roll over here, we're starting to get heavy. If I do get a short, where am I going to go to? If I'm going to cut it off short into this support and find out that's where it could project to, you're leaving yourself short. You're cutting off some gains where you shouldn't do. So I like to use those quite a bit. Sometimes I stick to them, sometimes I don't. But either way, it gives you an idea of where you could be looking to. And sometimes it just blasts straight through and doesn't always pan out that way, but more often than not, these sort of projections, like I said, we call them volatility, is where you could be ideally going to. If we look at this one here, just as a curiosity, this leg down here. So here did fall short and it extended a bit lower, and actually went a fair bit lower than that. So, but either way, if that kept you in the trade and you were just looking at follow it down, you probably got a bit more on that. But if you closed it out there, you still had a good little trade. Just a handy tool to use. So what was I saying? This sell-off here, it's got knocked down here, big sell-off, and bounced straight back again. So maybe that market's telling us that, we overcooked on the downside. Big flush out. Anyone that's been buying it here, massive flush out, comes straight into support. Well, not actually. I'll delete that because I don't find that support anymore. The next level down is really, we're looking down to here. But either way, it's still got supply issues, which is probably helping it out on the upside. Supply issues means, matching off demand, and if demand starts waning too much, then you should, and supply starts building up again, then we should see lower prices. But if not, I think as long as there's problems with supply into copper, we're going to get some sort of support into it. It's just whether or not this the US dollar moves higher to put pressure on the downside. So yeah, copper, I think it was extended down here on the downside. Expected a bounce, didn't expect that. So if we're extended on the upside, just look for a bit of a grind, and it'd be interesting to see what happens after that. I'm not trading copper at all, but I think it's a good proxy to how the market's feeling. As long as this keeps holding up, I think the market will keep holding up itself. Look at crude too. That's what I don't understand, why we're performing okay. We're coming to the support zone. We've got this big support zone around the 37 mark, so maybe that's just why you got the shorter term traders trading into our energy sector, picking up some bargains, looking for a couple of day rally. Now, if this holds this inside level at around 37.60 thereabouts. Whoops, we'll say the touch higher, 37.80, so below 38. If we hold this sort of zone here, we could easily continue this leg down. All right, it's just that it's up against a big support, so I wouldn't be selling into that support, and I don't think there'd be a lot of people selling into that support. It's going to take a bit of effort, some sort of nervousness to drive it through. If nothing like that happens, you're going to see some sort of back and fill. By back and fill, I'm meaning edge back up as these shorts have to cover. Okay, so I think unless this US dollar starts rallying hard, pressure oil, then I'd expect a bit of a bounce off that. That's what I'm leaning towards, because I think that leg off this highs is quite extended. All right, and it's at a support zone where you would expect some sort of reaction from buyers. Let's go and look at, probably don't need to look at longer term, because you can see that was a massive sell-off. We'll get rid of that. It's still looking weighty, but you've got a support zone through here, which potentially is holding now. Lower than that, you're looking down to 34.50 thereabouts, which it could do in a couple of sessions. There's no reason why it can't. We'll just wait and see. If that's going to happen, you're pushing down to this zone, I would expect equities to get sold down a bit, sold off, and maybe a bit of panic start to drive this market around, and a movement in the US dollar. But at the moment, the US dollar is not moving. Let's just look at that now. US dollar's been, I think when I was talking on, when did I do the talk? On Wednesday last week, we're chatting about the US dollar, and the movement was trading around 93.80. Now it's still there now. It's barely moved. Still looking at this in the US dollar. You got this up move, but you still got longer term. It's been selling down. So, high retested. So it's sort of that, what do you call it? Dynamic resistance zone that's moving down. And it recently touched on that zone, and it sort of come in line with that support zone, or a zone, a bid zone, now becoming an offer zone potentially at around 94.90. It touched up there, so just below it. And it was that 94 zone we've been looking at. So if we start holding a support in here, this rising support, and we've got a higher low starting to build, then we're looking for potentially a breakout. Problem is, with the US dollar, it's conflicted. You're conflicted by more stimulus, means a weaker US dollar essentially, but you've got to look at it from two sides. Just because they come out, don't go and start selling and buying the other currencies, buying the Aussie because they've come out and said stimulus, they're going to get some more stimulus. You get a reaction lower just because your retail will start going sell. They could get caught out because it's about how much stimulus the market's factored in longer term. If we get sounds bad, $1 trillion stimulus, it's not enough, maybe. And anyone that's been factoring in, if the market's been factoring in too, we could get a bit of a bounce, because that's what the market's looking at. Looking at $2 trillion, it's half the amount, which means that potentially, we're starting to rally there. We're not going to get it. That's the end of the stimulus. That's the end of, if they're not going to come to start throwing more stimulus at the market, and they're going to do that when the market's melting down. Maybe they're taking a bit of preemptive approach at the moment, but the markets seem to be okay. They're still heading higher, so there's no real reason to start throwing more money at it. But if the the dollar is expecting a lot more, and they factor in a lot more, expect a bit of a bounce, and that's going to pressure a lot of things. You'd expect it to pressure the euro. You'd expect it to pressure stocks too, all that sort of stuff. So I don't know. I haven't really thought through the bonds, but yields are low, and it might help the bonds as such, because less dollars in the market means less, more, I guess, less inflationary pressure is what I'm trying to say. Less inflationary pressure because you're throwing free money at the market. They've got to spend it somewhere. They're spending it in shops. They're doing it. All the unemployed, you give them free money, they go and spend it, which is fine. That's what it's meant to be doing. But it also creates inflation. Now, if it doesn't, you haven't got as much money coming into it, not as much inflationary pressures. It means maybe longer term they're looking at interest rates kept lower for longer, which probably should be better. Well, maybe better for shares, but it's a hard one. It comes down to how much has been factored in. Either way, we're extended on shares, and I think it's some sort of movement up. It's probably going to pressure the market, and it's a change in dynamics of what's going on. So we'll have to wait and see what starts to play out. Now, breakdown here, we're starting to look back down to lows, and I think that's only going to happen with a big stimulus package to be starting to break down and retesting down to these lows, or at least sticking a move and start taking out those lows. Could spike down through here and bounce quite quickly, and that's just potentially to clean out a few, come out with a stimulus package. US dollar's probably going to get sold off. They let it go for a bit, let it spike, let it clean out a few longs, and then turn around and bounce. and get the shorts caught out, caught off guard. So yeah, that's pretty much what I wanted to talk about. I thought the Aussie was going to roll over. We had a potential short opportunity. I still see there's potential weakness coming in. It just wasn't going to work out for us today at the moment. We were looking at, I'll just clean this up, looking at a short. So I still think there's the opportunity for a short. And if you go and break it down, we've got this move down. We're coming up for the first time and testing a level, which we've tested and failed off before. We're coming up and testing it again. Okay, this time it could break through. But if you go and look at it from a different perspective, look at it from technically, we've got this leg up. That leg up starting to fail. So anyone that's been buying it up here is going to be thinking twice. Okay, there is some shorts that have been cleaned up, potentially looking to re-short it again. But this zone through here, which it traded off back in, was it September, 9th September, reacted off it, went stalled there again, then went through, and now we've come all the way back, retested and failed, and we're up here again. So from here, do we just keep plowing high? Do we just do this and then retest it and then go? Or do we start to back off and get some lower highs coming in and get a selling opportunity, which I'm sort of leaning towards because this trend up is starting to break. So we either get consolidation sideways or we're going to start to get any buyers through here that really haven't had too much pressure put on them just yet. G'day, Arthur. Cheers, mate. If they get a bit of pressure put on them, we get some lower highs coming in, I think we could move down to 70.24. And I think that's only going to really happen with a good or decent bounce into the US dollar. So yeah, but I think longer term, look at this move up. There's a lot of juice in this Aussie dollar that could easily get squeezed out. If you look at it that way, it's not only these buys and get squeezed out. There's a lot of buys stacked up, and we're starting to look a bit heavy with, especially when we've got this move down. So be wary. There could be a really good short on, but we may have to take one or two nabs at it. I still think, yeah, longer term, we're going to start to see some sort of pressure on the Aussie. Now, if there's anything you want to talk about in the way of stocks, just whack them up. I've got a couple that I'll talk about, but yeah, if there's anything you want to chuck it in the chat now, we'll spend some time looking at some shares, just look at some other stuff. Yeah, look at energy. That's the energy sector today, up 4.2%. So I find that very strong for an unknown reason. Let's look at the daily charts. What is it? STO. I don't know my energy stocks that well. That's in a downtrend. It's just had a bit of a bounce today, probably after the extended move down on Friday. I'm on the daily chart, aren't I? Yep. WPL. So that's down too. So there's a few. Yeah, heading south. I don't find that as a buying. It's probably, look, those few days prior, these couple of days down could be said we could get a bounce, but we might just bounce to 18 from here, 50 cents away. So if you're buying around here, looking for a bigger bounce, we could just keep rolling like we've done before. Bit of a bounce here, rolled. Bit of a bounce here, rolled. Took out the low. So nothing to say it can't keep going down to these lows, especially with oil potentially still under pressure. Now, if we did get a bounce in oil, I think this is a short-term opportunity to play a bit of a bounce into these. If we get bounce into oil tonight, $1.50 rally, then expect some sort of upside into oil. What else are we going to look at? So there's two. So okay, let's just go over. We'll do this ADH. So ADH I was looking at as not so much. Well, it's still looking good. Adair's on the weekly. Just check on the weekly. So we're just bouncing off the long-term MAs. We're starting to hold above the 20, which I kind of like. So we've got. We'll break it down. I'd still be nervous about jumping in and going long and loading the boat, just because we bounced 130 today, because we bounced before and then got sold off the next day, and vice versa. We've got sold off and bounced. So it's kind of a bit of a chop fest at the moment, the ASX and the markets. Let's look at. We've got. So make sure I've got that low. So this is one that sort of popped up. So that's the trend up there. It's still relatively intact. You could argue this sort of flush down. You could change that. You might, if you're going to go purely across the lows, you probably got it more like that. But either way, take that off. There's support coming through, so it's really what I like. You've had this move down, bit of chop here. We had a bit of a move down. We've had a pop. So we took out this little minor level. It's only a minor level at say 320, 21. And now we're starting to hold above the MAs, and you can see the MAs starting to curve up. Bit of volume come in the other day. Was it Friday? Some good volume, and it's the selling pressure come out, and someone was keeping it. Someone buyers were still holding it up, okay, and holding it off those MAs. So that's a nice, not a bad little sign. I mean, there's two things. If you get an extension lower and an increase in volume when it's moving lower, that's it's not a good sign. But if it starts to hold, if it's holding at a certain level, and you've got the volume keeps coming out, it means the buyers are holding it, soaking up that selling pressure, which I don't mind that there. And you've got it through here as well, which I think correlated to, just see that. Yeah, those couple of days, green day here after we flushed out $3, good green day on some good volume, increased volume. So it's trending higher. So maybe a breakthrough, back up through 340 could be an entry with the lows below 320. You're not taking a big risk, and see if you can get up through the highs. Now, if we fade off those highs fairly quickly, then you've got to make sure that you might tighten up your risk. If we blast through and finish below, then you've got to be careful of that too. If we go up through, stay above, it's a good sign. Go and look at, there's another one, this is a short. So Champion, I don't know if anyone watches that. I'm not saying it's a short, but I'm saying you've got to be careful if you're long. I'm not a big believer in shorting into shares, especially the way we're not in a downtrend into the market just yet. We're sideways action, like we were describing before on the ASX. So we start to hold. Just grab you that. If we start to hold below this level, or if the index itself starts to roll, pops out the bottom of that channel or the range that we're talking about, then this could roll just the way I'm viewing it. You've got, resistance zone through here. Okay, it's traded through there a couple of times. And we probably trade that. Look how clean that is. You touched here, brush through. So this high here probably matches off just about. We just see. Oh, good. I can't see the highs here. Same old problem with my what have I got here? Come on. There we go. So this high in here. Oh, this is frustrating. It's what's that high? High of 335. That high of 337. So it's a touch below this level. And probably that level through here, 325 matches off around here. 325. So you can see this resistance zone through here is pretty solid. We just backed off it there. What we're doing now, we've got this support at 270 now. If that can't hold up, and you can see the MA starting to roll. So what we've done, we've gapped down here. We've grinded our way back up to the MAs. If we start to fail here, there's a chance that we could push through 270 and we start to look in a lot lower. And if you look at it, that's the uptrend. Now we've contracted off that high. Okay, we've done this sort of action, got a bit more volatile, and we've headed all the way back up. So that is a key double top. It's a major double top, because remember how we always speak about double tops in reference to the anchor. So if you do this kind of thing, oops, that's got to be cleaner, don't I? Let me just be a bit cleaner. That's your move up. That's your anchor. We've popped up through the high. Now if we start doing this kind of thing, and you're looking at that as, we start to push back up to that high and fail off that high, that's different when you haven't broken the anchor. That's the anchor to the trend up, anchors to the trend up. We pull back. That's now the anchor. But if we don't break through that anchor prior to retesting the high, you could get suckered in to go short and then clean back out again. So if that's the case, you got to be careful. But what we're seeing here is a big move up. We've faded off that level quite a bit, and now we're coming back up. There's a potential if we do fade off, we come down through 270. That's different. That's looking at something where you've broken through the anchor and we start to lift again and then we fade off. So that there, once you break through the anchor, different scenario. I think that's a lot stronger on the downside than what this could be. So we're sort of at the same, we're at this level here, but I think we're in this scenario. So there is the potential if we do, I mean, there's nothing to say we can't just go straight up. But if we start to break down, looking at what's happened just in previous few days, there's concern for me that we go through 270 and we could be looking down towards $1.30 or 40. But either way, that's, you know, so we got up through those highs, rejected here, couldn't get up there then, not then, we did bust up through. So when we're coming off that level, you would expect it to go straight through. But instead we faded. Okay, fair enough. There's a bit of a deeper correction of what we thought. And then we've gone up again. Okay, this time it should have blasted through if the market's positive. Instead, we failed off again. And we come back down to this key support zone, which is quite clear a support zone. So that to me, there's kind of a line in the sand for the highs at around 330, 340. Okay, if that's the case, then anyone that's been, you know, buying in here could be under pressure. Bought it up here, you're under pressure. If you held through all this and you bought it here, anywhere, you're probably looking at that going, oh, look, could be some more pressure to come. We just wait and see. But I think if we start to go down, especially if we start to head down from here and we start to break through that level, so that's your 270 zone. If we start to break through there, then we could get something on the downside. But just watch out for that. Now, that's probably the two that I want to go through. Is there anything else you want to go through, guys? Any shares you whack in there, or we're all good? What's the other one? EOF. EOS probably the only one that could be a bit. I don't mind that at all. It's just that, you know, there's probably the overall market's killing me a bit at the moment with the bullish sentiment. I just don't think it's bullish. I think it's getting played a bit. You know, there's some strange moves happening. When strange moves happen, they don't add up. It's not really a bullish market. It's just weird. And they can only happen when people sort of stand aside a bit. You know, it's lower volume, thinner markets. They can get pushed around on the upside as well as the downside. So we'll go over this. And then, so just going to refresh something here. EOF. Now, MP1, all right, Pete, no worries, mate. Okay, Fiber, I think we put up this as a potential alert. Hasn't set up just yet. The thing is, you've got the highs up here. Okay, when you do this kind of thing and you fail off there, buyers in here, the ones going to get squeezed out. You can see that we've got this move. Probably shouldn't have gone as hard. It may have held up here and started to lift again, but instead the market sold off and got smashed. Okay, so it's cleaned out a lot of buyers, but what we've seen here is this big bounce back, and we've taken out that high. Okay, taking out the high, you're either going to fail off there again and get a deeper move down and start attacking these lows, but if you start holding up at higher levels, that's constructive. Okay, so what we're really looking for is that to break. A nice little flag, pennant, whatever you want to call it. I would like to see that hold, these lows hold at 240, 250. I don't want to see it come back down and test that because I think it's off the cards for a while. But if we hold in here and we start to break up through 270, for me, actually, I think that's a good little buying opportunity through 270 because it looks like it's going to start heading back up again. You've got sellers coming in constantly and buyers soaking up. So at the moment, we're at that point of agreement. We don't know who's going to win, buyers or sellers. So when you start to show signs, you know, break up through 270, it's quite clear that the buyers are going to start to win, and sellers, anyone with, you know, some technical knowledge, can start to step aside looking at that. You know, break up through there, it's going to drag in some buyers, put sellers back on the sidelines. So the weight of numbers is going to be to the upside, especially off these higher lows at 210, 220, and then you got this inside level at 230, and then again we've got another higher low around 245, 250. So that to me is looking more positive for a move up, and I'll put my little arrow on there. Potentially, you know, your first port of call would be these highs at around, say, 310, and from there you're looking back up to highs around 370. So get $1 on that. I think pretty handy. It was that 40% gainer on that. We'll get on to MP1. MP1, it's in an uptrend. You don't want to see it break through that low. Then it could start to, we could at the moment, we've just failed off this high. draw it up for you, Pete. Let me just go to the weekly. So the weekly, if we chop around here, we could still easily hold off the MAs, and it's quite a constructive trend. It's quite a long-term, well-established trend. Bit of a flush here, start of the year, which has pushed that aside. We've continued higher. Yeah, that was in March, Feb, March. That's a sell-off. Taken out the highs pretty quickly and continued to hold. So the trend is up. It's strong. It's still on a daily and a weekly basis, still well and truly intact. So we got to look for levels where we could be concerned. Here we go. You've got level here. So that's the leg up here. Got to these highs, started to fail a bit. That flushed down, and then we started to lift off here. A lot like we just spoke about. I don't even remember what it was. EOF, Echo Fiber. It was a bit like that. Then we started to hold up, at this inside level. Inside, higher low than that. Buyers soaking the pressure up. It'd be nice if we get that sort of thing on, what were we? EOF. We start to get that kind of thing. We just blast through. If we can get that, that'd be nice. So that looks like a similar type of setup. Hold the inside level. That's the case. Start to lift and blast out through the highs. But MP1 looking nice. You've got this leg up, so okay. Then you've got this inside level as a key level. It doesn't matter. This is the level you'd like to see hold, something like this. And if we can start to contract in again, you get price contracting in, holding off that level. It may have tested it. It just draws a different color. We've got this kind of move up, so that's there. We start to come back down. Just draw that. So that's that leg up there. We start to come down, retest it, and we start to hold again. We might lift it up and then blast through. And if we can do that off against some higher levels mean people soaking up the selling pressure. Then you just want to see if we hold that up and we squeezed out some buyers. As people get a bit nervous, they're looking at the lower high, getting a bit nervous. But if it doesn't break that level, that's where your risk is. You break down here, and then you got to ask yourself, okay, I don't think we're going to. We're potentially going down, and if that's the case, you sort of take it from high to low. You could go down here, and if we start to fail and we go down even longer, so further down to 13, now you shouldn't really have retraced all of that move if it's a bullish market. So you got to ask yourself that. So ideally, if you can start to hold at 15 or above, through this level in here, that's fair enough. It's about a 50% retracement of this leg up. We've held, more buyers are dragging in. Buyers are still happy to soak it up and lead to another push higher. So through that, I think you're going to have to question it a bit. It's looking good, Pete, anyway. Looks nice, mate. All right, well, there's nothing else we're going to look at. We'll call it a day here. Short and sharp. Well, shorter than normal. So if you've got any more questions about, like we got Discord we spoke about earlier on, any of those charts that you want sent out, if you need that link for the other talk that I was just chatting about entries, focusing on those entry setups and the reasons why and all that, price action behind them, just send me an email at support@tradesetup.com.au and I'll whack in the charts, the JPEGs, and send them off to you. I've got a PDF I'm just going to put together, finish putting together as well. Just a bit of educational material that might help you. I mean, can't hurt. And then, just let me know and I'll send it across. If you want the link to the talk, I'll see if I can grab that. And if you don't have TradingView and you can't find us on TradingView, you'll find it on there. I mean, if not, I should just be able to add that link in and send it off to you. And you should be able to view it straight off. And if you want the Discord, live trading, that should be up and running tomorrow, I'm pretty sure. Let me just check something. Tomorrow, China's closed again, so yeah, it may not be much happening tomorrow. God, how long did they close for? They don't open back up until Thursday, which is unusual. So that means the Hang Seng, which I like trading, won't be on. So it's more just really focusing if we can get something off on the Dow or the Nikkei. We'll be looking at that, but don't expect too much action. Generally, they're led around during the day by the Hang Seng. All right, guys, that's pretty much it. Have a good day. And like I said, if you want that Discord link, send me the email and I'll shoot it out to you. Enjoy your day, guys, and I'll speak to you soon. If you like what you hear, it'd be great if you can leave us a like. Cheers. Speak to you again soon. Bye.